All right, here we go. It's Friday, NFP Friday, end of the week, and it's September 5th. So jump into two trades. We took the AM short. NFP. This is NFP. Now this is just a demo because I was feeling completely horrible, and based on feeling horrible, I couldn't focus, and so the pre-market basically consolidation, just not maybe want to put on some real risk. But if I was gonna be there, so after I saw this candle displace down and closed, it finally closed down here after the S&T. Where is it? As you can see right here, ES took this thing up right here, and so at this point we finally had 15-minute SMT, and it was literally right at the macro, at the beginning of the macro. So, and then we get the displacement down, pop up into this fair value gap, displace down, and another fair value gap, displace down. Here's your 10 o'clock candle. So this is the 10 o'clock silver bullet. This right entry is based off of this. I was using this as like an order block. And the stop was literally right above this fair value gap right here. So all it did was pop back up into the first presented and then continue down for the silver bullet and then down. This is the RTH gap right here. So the idea was this. I had no idea if we were gonna like. Basically, it was like NFP, so like high, and then run down to the date down to the low, the data low they call it, NFP lows. But what was in confluence with that was, well, of course, like standard deviations, but we had midnight open. We had the end dog down here with the daily volume imbalance. So it was basically like, let's see how, like, okay, let's see how we can get underneath this. The fact that we weren't gonna hit, like, I'll take a partial here if it's before 10 o'clock, because that's like what that thing is. You want to hit it before 10. But if it's after 10 o'clock, I'm just gonna like see how can we react at it and not take a partial and like aim for like the lower areas. Um, and so that's why boom and then boom boom, two standard deviations, underneath midnight open, right at the low, the exact low of the NFP candle. So that's pretty much all we needed. Ended up going a lot lower. Not a lot lower. So this is 118. It went, yeah, a lot lower. It went a lot lower. Um, and so that's that. Now, what do we get into the PM session? So this is 11 o'clock macro. That's the reversal. Oh yeah, look where we reversed from. This right here. Thursdays and first presented. Look, it ticks into it. Now I love seeing that. The same thing happened yesterday and during the AM session. The low of the day we tick into Wednesday's AM first presented as well. And that was it. So it's really cool to see this sort of stuff happening. And the reason why I really liked it and so look at this for a second. Now this is some piece of logic that we just picked up from ICT, which was this. This is the first presented fair value gap. This is the fair value gap from here to here. And why is that? I don't really understand it, but why we mark it up to here, all I know is this is how I described it. This from here down to here, this all in here, this right here. What is this? What am I doing? This whole area. This looks so garbage. Come on. Darker than yourself. All of this is a balanced, this is a balanced price range. When you see body, no wick up here, the next candle opens, wick down, and then go. And so basically from this open, from this close, down to the bottom, this wick is a balanced price range. And if it's a balanced price range, why are we including it inside of the markings of our inefficiency, which is the fair value gap? I don't know why we are, but this is exactly how we taught it. You include this balanced price range inside of your fair value gap. I thought fair value gaps are inefficiencies. Why the heck are we using? Oh, where do you go? Why are we including a balanced price range? What the freak? Come on, man. What is this? You're gonna delete the thing and then move me somewhere else? That's retarded. So, anyways, but because of that logic that we had just learned, we were able to include. If we didn't learn that, today's low would have not actually ticked in. Would have not actually ticked into it. See, you needed that balanced price range for price to pop, touch it. Otherwise, the fair value gap first minute would have been like the top would have been like down here. We would have just missed it. So it's cool. It's really cool. And I like seeing that like the low tick of it is that because when we have such a downward move, like such a flush out like this, I'm looking for reasons for the reversal to come in. Now, like say it like had reversed here, well, like why would we leave this right here? I like to see it give some sort of sign. Like this is a nice sign. We went through the NWOG. This NWOG's all the way down here, but like this, boom, that's nice. If we had just like left this thing open, I would not like it as much. But the fact that we were able to hit it just gives me that extra bit of all right. That's a nice like we hit something. And on top of it, we have go up to because we did have SMT down here. As you can see, we have we took out these lows right here. We took out basically all these lows right here, which is it's basically Thursday low of the day, not low of the day. Yeah, Wednesday. We took out all this stuff down here, which is basically like Wednesday, Thursday, like overnight sessions, you know what I'm saying? Thursday overnight session. Yeah, Thursdays we basically took out Thursday. We took out Thursday's low. So it's a previous day's low. That's really an easier way to describe it. As you can see, I'm just really looking at yeah, so it was a previous day's low. Holy shit, that makes it way easier. So we took out previous day's low inside the friggin' whatever this is called. I can't even think right now. The daily volume bounce on ES. Okay, so that was the SMT. So basically, we had the SMT at those lows. Come on, where are you? The SMT right here. So this is SMT. And what does this tick into? It ticks into this yesterday's AM first, which is nice. Dun, 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 dun. Why is it not extended to the right? Anyways, so then we get that, and then what happens is, um, we start moving up from there. We come into NWOG, which also happens to be. Let me jump up to the 15-minute. Let me do it on here because everything's clean. I just want to show you inefficiency. So look at this. So that's SMT, the purge. Okay, so look at this 15-minute bounce price range. Look at this. Look at this. Look at this. Look at this. Because we had boom, boom. So we're getting inside. So this is nice. These are nice, but it's unwilling to get up there. Now, I probably would have took a long in one of these areas if aiming for here, if I was on the screen, but this time of the day I'm always working, lunch hour. So fortunately, I didn't take anything because I was just monitoring on my phone. But look what happens. We have a balanced price range right here. None of these actually touch the balanced price range because look at, you'd have to get below this candle's low to get inside the 15-minute BPR. So what we're doing is we're engineering these like highs and lows, and basically inside the lunch hour. What comes is we finally get the purge post 1:30. So now to the PM session opening range, we run equal lows, and what does it do? It tags actually the 15-minute BPR. Beautiful, beautiful. Now let me show you this on this chart. This candle's stick boys. Let me take this thing off for a second. We don't need that. So it's right here. So it's engineering all these lows. This purge, 1:30 opens, comes up, leaves the PM session first presented, and it runs these lows. It's the lunch lows, the equal lows, and tags into our 15-minute bounce price range. That's the low right there. What does it do? The delivery is this. I'll show you the executions right here. Here. As soon as we run this low, I get in, targeting the highs. 50 points. And so what is the logic behind this? Okay, 130 comes in, gives our first PM first presented, finally runs the lows. We don't have SMT right here because all of the assets had ran these lows. It would have been nice to see SMT, but what I was basing it off of was we tagged into the 15-minute BPR. We finally got it, and there was SMT at the actual low down here. So this right here don't need to have SMT. It would be nicer, but it works. It worked anyway. It works without it because the logic was SMT was down here. This is running out lows to continue higher. So we had this and hit this basically when we're inside. I basically got to the screens around like right in here, like right post 130. And basically what I'm doing is like I'm just like I just drew these two lines waiting for one side to get swung, and then gonna just like if we had run up to here, maybe I would target it here. But I like the fact of going lower to go higher because my draw is up here because based off of this is the low and we have the 50-minute BPR, and I want to see like I want to see us go up there. And here's the other thing. The fact that we had displaced lower below the 130 opening price, tagging out the equal lows, base and everything else I just talked about, gave me the confidence. And we have the displacement up. This gave me the confidence that okay, this is we're in deep discount right here because here is our opening price. So so if we're gonna run liquidity and we're way below here, this is discount. This is not we're not going lower. We are in the discount, the best discount down here. And the fact was that we gave this manipulation right before the 2 o'clock macro. I love to see the sweeps happen right before a macro because then I'm expecting the macro to be the delivery, which it was basically like an upward consolidation, and then we got the delivery outside of it. But it was a little bit messy in here. It kind of had me a little bit like we're probably just going to continue lower and maybe run like these lows, give SMT there, and then go. But we didn't actually do it. Um, it was just a sloppy bit in here, just had to hold on. So basically, this was a piece of like engagement. I was gauging the short long on this 5-minute wick. Look, we're only wicking into CE of it, so that's really great. That's perfect. Now I love seeing this as well. Okay, so we're inside the macro 2 o'clock comes. So we finally get out of here, and then we finally hit up to 130. And now look, this is our target. Look at how price runs back in, um, testing like the 130 opening price, but more accurately the first presented PM session for value gap. Look at that, boom, again, boom. Look at that. Like it's unwilling to go below there. It's just giving. I guess it's just giving those who have any knowledge about this. It's telling you, all right, get in. Oh, here's another entry. Get in. Well, now we're inside the 3 o'clock macro. Last chance, get in. And then we're just gonna rip it up inside this macro. So that was nice to see. Now the other thing that I like to see is this on the 15-minute. So we got this 15-minute BPR, and then look, we created another one right here. That's such a beautiful thing to see. When your entry is like down here, and you see this above your entry, you're in the move, and you see this happen above where you're in, man, that's such a good feeling because like stops can 100% be moved to break even. Because if anything, all it's gonna do is it's gonna just tick into here. It's not gonna come down here. And it doesn't even need to go down here in this situation. All it does is it's stopping at the first percentage. So I love seeing stuff like this. 15-minute BPR, 15-minute BPR, boom, target. That was basically it. Um, I was beating myself a little bit about the shorts that I only demoed it and I wasn't like focused, but I have to give myself some slack because I was really feeling like shit this morning, and what really did it to me was that like this in here just kind of had me like it threw me off. Like it just made me feel like okay, when I see an opening range that's kind of like sloppy, even if I have like the thing of okay, once we breach here, that's like our SMT to go lower, it still just threw me off. And I think why was because on the 4 hour coming into the open, we had we basically have this right here, this 4-hour candle. If you can look, let's see, is it gonna show it? Yeah. Well, look this, and this is basically the NFP like wick. But look how like much SMT we get down here. Look, we're wicking into this freaking. Look at this here, and then on YM into here. But look at that's this candle right here. That would mean this candle would be wicking all the way down into here. So we had a major SMT, massive SMT right here, underneath like yesterday's PM session, underneath yesterday's like lunch like session, basically massive SMT on a week that, as you can see, what? No, on a week that had been a manipulated Tuesday low of the week, and they're just up since then. We have all-time highs right here, and if he gives that SMT right here, I mean, damn, you know. So that kind of had me like a little bit like, I don't know. Even though lower time frames, we get above here, we show us like I'm looking for like a reason for us at the very least gravitate in this direction. Here, RTHCE, RTH cap CE, and then, you know, in here, just because of the simple fact of this, data high to data low. Um, but yeah, you just have to, you have to be easy with yourself, because if you don't feel right, you pull the trigger and you're going to be uneasy. You don't want to like build those habits. You want to build the habits of like, no, this is a good trade, and I'm not nervous at all about what happens. I can just read the order flow, because like, it's a good one, you know what I'm saying? So I was a little bit upset because I took the perfect trade anyways, that I would have taken. um, but it's okay. We got our hit. We got our run during the PM. That's all.